Mr. Bakshi, if I could just bring it to you, 4.1%, and in the context of that number, what, as far as the banking sector goes and credit outlook looks like, what would you be expecting?
So the number is definitely, it has to be broken down. I have heard part of what you have said and part of what I couldn't hear from where the degrowth has come. Because electricity is general. Manufacturing has been lukewarm for some time. Even in February, I think it was consumer durables and some other area which had done well. So manufacturing has been consistently a disappointment. Despite that, our outlook was about 6.14, which was lower rung of the band, but it has come so much below that. It is definitely not positive news for anybody who has to do anything with the health of the industry or who is looking to market his ware, including banks who market credit, which is on the back of economic growth. So it's definitely doesn't enthuse, particularly as it was stated, it's come on the back of a very low base last year.
What kind of language are you expecting from the RBI come April 17 in light of the IIP numbers, in light of the kind of inflation numbers, and what a possible course of action would that mean for you?
Speculating on the type of language they will use, I don't know. I mean, they have always been, I think it is more now wearing down to balancing growth with inflation. The bad thing is that inflation worries have not totally gone away, and the IIP numbers and the GDP numbers are not coming very heartening. So it's a very Hobson's choice for RBI right now. But maybe we have held the view that we might expect some cut here. Although I particularly believe that a number of other factors have also been responsible for the slow growth. There are various projects which got caught in either regulatory issues or clearance issues or raw material issues or other things other than interest rates alone. But RBI, who has got a hold only on the monetary policy side, I think they may cut a rate a little, but the language will indicate that they will watch the situation equally between growth and inflation, because inflation worries still are hanging in the horizon.
Mr. Bakshi, what are your expectations when it comes to the deposit and the credit growth, and which sectors do you believe will lead it?
Then actually the deposit growth will again depend upon, like this year the deposit growth was very lukewarm at about 13.4%, and that is a riddle for anybody as to how but if you see the money supply growth has also been very less. One reason that comes to my mind, apart from things like money moving from financial to physical assets, but that so long as that physical assets are acquired within the country, it should not affect the growth in deposit, because the money moves from one pocket to the other pocket in some way. But so long as people are lot of investment in gold, which is imported from outside, if you see the foreign exchange reserves, my sense is that YOY they would have moved down by $13 billion. So there has been a net outflow of foreign currency. The current account deficits continue to be huge, and therefore, if they are not bridged fully by the capital inflows, the liquidity money supply becomes less, and that has got a tremendous influence on the deposit growth. The second is, if the credit doesn't grow, the multiple credit creation doesn't happen, and that also influences the deposit. Going forward into this year, it will again depend a lot on how quickly the sentiment improves, driven either by RBI action partly, and partly by other happenings in the economy, where the investors feel enthused of investing in capacities or creating new projects, and the projects which are stalled do take off. So any guess at this stage will not be conducive, though internally the Bank of Baroda has grown by around 20% last year also, and we are hoping that we should be able to grow between 18 to 20%. But the industry figure maybe, I don't see anything which propels it too much above what has happened, unless and until quick actions are taken.
Right. Now, Mr. Bakshi, just a quick word on the liquidity picture within the system. Now, to the extent that deposit growth has once again begun trailing credit growth, do you believe that the banking system is headed for a large structural liquidity deficit in the coming months?
Right now we are standing at 78% credit deposit ratio, which is quite, I think it's very difficult to go above that, even with whatever other monies are there. So now the things have to grow in tandem only, so that's really important.
With respect to the kind of numbers that we have seen and the kind of macroeconomic problems that we're working with, that this kind of a number is a reflection of the overall mood in the industry, that it's cautious to pessimistic?
You're right, I think. Of course, the revision in itself shows a very bad statistical issues even with compiling of data. I don't know, that's a serious credibility issue, because all policy framing and everything has been, RBI governor has been saying that the data quality is not what can become really on which they can take decisions of policy decisions. 6.8 to 1.1% is clearly frightening. In fact, when the last month the IIP numbers had come out, some of the sectors like non-durable sector growing by 42% against minus was itself a surprising number. Some items in that didn't stand to scrutiny. So these low growth rates, 1.1% and 4.1% on a low base, and all these are definitely not enthusing of a turnaround story, and I think something needs to be done quickly about it.
I would ask you for your reaction to it at 4%. What do you make, 4.1%, what do you make of the IIP numbers, and do you suggest that we completely ignore this number because once again it comes as a major bolt from the blue?
I think this is good in a way, because RBI will then have legs to stand on and say that they are going to cut rates tongue-in-cheek, but the numbers are pretty much all over the place. So I wouldn't kind of put reliance, and the market itself gives the heads up. Within 5-10 minutes they start kind of going back to where they were, because people don't really rely on these numbers. So if people don't rely, then what's the worth of any number? There is no governance in this country, and frankly there's a huge trust deficit. If you go out and ask any industrialist, all of them are saying that we don't want to invest anymore because there's no clarity. And if that is the case, then I think pretty much the answer is clear, that these companies will continue to grow, but obviously their growth won't be limited to India. And they'll continue to look at things outside, including infrastructure companies. Some of them who I went and spoke to said that, you know what's happening, we are not getting money after the work has been done. And why that is happening? Because no chairman wants to kind of sign off on any project till he gets his board approval properly to pay the money. And this is after the projects have been completed. Now, if you don't get money for completed projects, why would anybody want to start new projects? And everybody is frankly scared of going to jail for all these kind of things, because suddenly out of the blue something will happen in some RTI application or something else, and people will say there was some fraud over here. So people don't want to do any kind of activity, and that is the mood in this country. And unless that changes, I'm in the guys who are always positive, so I expect that to change very swiftly as soon as the money kind of goes into the system and the government also starts acting in tandem with all the scenarios which have been done in the past 1 year after the 2G scam. If that happens, then we are on a terra firma. Otherwise, we'll continue to go up and down, pretty much not do much in the terms of the Sensex, although I am hopeful, as I said.
Sure, good. Would you still stay away then from infrastructure stocks, because valuations have got beaten down quite badly, and you have some of your colleagues in the markets talking about possibly beginning to buy into infrastructure stocks?
No, I will also buy, because these are also mood situations, and as soon as people start getting again their things working, they will change their mood. But the government has to do something about it. Everybody is sitting on his hands. It doesn't work that way. So people have to get back to their desk and start saying, okay, we are going to take some risk and clear things. Every PSU can't sit and say that let the board decide. The chairman is there. He has to take action, and he has to react to every situation on a daily basis. Look at this PNRGB yesterday. I mean, suddenly the stocks are down 30%. Look at GAR. There is no clarification now for nearly a month. So, things can't go in always in a fluid situation like this. You have to react to situations, and now every day you are seeing FIS. I'm more worried about, if money walks out of this country. And then we have a big problem on our hands.
Gul, coming to you with respect to the kind of future outlook that we've been talking about, we are expecting that IIP is likely to remain weak also in the near term. Economists are expecting FY12 IIP at 3.5 to 4% and for FY13 at about 6.5 to 7%. Would you concur with these expectations?
So see, in India, the consumption story is pretty well entrenched. So consumption will keep on happening. Now, whether we are able to kind of manage to kind of sort out things and make the business easy in India. You know, every morning when you get up and you read, including the pink papers, which are one of you published by your group, you know, it only saddens you that last 2 years we had a world of an opportunity where everybody else was sinking, including China, and we were twiddling our, thumbs. And we did nothing about it. We pretty much got caught in our own situations and we went down. Unless those things change, unless the sentiment is improved, unless interest rates go down, unless the liquidity improves, unless the governance improves, you can only have a consumption story which is not driven by government. If it was to be driven by government, that also would have been in a problem.
Do you think that we should just look at these numbers on a deseasonalized basis?
I've always said India is a bottom-up market, and George and I have met up on several occasions and talked about it. Every company you have to go up and understand what they are doing rather than try to kind of make it a basket and see. So, this is what I've seen for the last 30 years or 32 years which I have been in the stock market, and I'm not about to change that thought process yet, because you saw that there is no timeline. I just wanted to tell him that America is 4 times the size of India in terms of land mass. Just keep that in mind.
Sure. So, Gul, based on that, which sectors would you be betting on?
No, I'll obviously bet on the banks. I'll obviously bet on automobiles. I'll bet on consumption as always, and I'll bet on some of the infrastructure companies, and I will be neutral on IT because expect that the growth is slowing down there. And I also have heard rumors that this time around Infosys may not give you quarterly guidance and it might stick to yearly guidance. So, you have to kind of watch these things, and rest of the things are pretty much the pharma sector. Again, is each company is an industry. So this is basically the overall scenario, and that's what I will continue to do.
I'm just bringing it to you and picking up on the point that Gul made. Does this essentially, somewhere confirm all the fears that we have seen a big breakdown in manufacturing, and somewhere this expectation that it's time now for the RBI to start addressing policy rates?
Yeah, I think it kind of reinforces the view that there is a slowdown in the economy, and the RBI really needs to now look at that aspect more than the inflation aspect. I think the Monday inflation number will also, especially on the core side, be pretty low, and I think that should give RBI good reason to cut rates in the policy.
The kind of investment cycle that we're seeing, do you see it picking up, or do you think things will get worse before they improve? And how are you perceiving the consumption demand overall in the economy?
Well, as far as the investment cycle goes, we do think that the RBI will have to ease liquidity and cut rates. It will hopefully lead to a transmission of monetary policy through the economy. We are well aware of the fact that there are other issues which are kind of connected to government policies which are weighing on the economy right now. But as far as the RBI goes, as someone just mentioned, they have control over only the monetary policy. So I think they will have to do their bit to kind of promote the investment cycle. And as far as consumption demand goes, I think that will remain buoyant because India still remains a kind of a country of the middle class and the growing middle class. And even if you look around anecdotally, consumption demand will remain high. That's probably one of the main reasons why inflation is remaining so sticky.
Now, the January number of 6.8% has been revised downwards to 1.1%. So, IIP growth in the previous month was 1.1%. Does this, this whole revision, and by a huge margin, go back to this whole argument or discussion that we've had for months on end about the quality and the reliability of IIP data and the fact that, people have stopped giving it too much attention?
Absolutely. I mean, it's pretty shocking that you're telling me that the previous number has been revised down to 1.1%. That kind of just proves the fact that these numbers are very volatile, they're not very dependable, and they're swinging by huge amounts. And the scary part is it can swing on either side, and there'll be times when they update one component and suddenly that shows a spike. I mean, the spike in January was due to food and beverage growing by 92%. Now, I don't know in this revision how has that changed. It'll be worth drilling down to see what has led to the decline after the revision. But your point is totally valid. These numbers are very volatile and you've got to take them with a pinch of salt.
Let's also bring on board Mr. Ashwini Kumar, Chief Operating Officer at Nitesh Estates, who joins in from Bangalore. Mr. Kumar, thanks very much for joining in. Do you think that we should read into this IIP number of 4.1% with a pinch of salt?
Well, I was expecting after the announcement of the PMI index that at least the general index would be somewhere around 6.8, somewhere around the January number. But I am quite surprised that it has come down as low as 4.1. But yes, there has been always a high fluctuation in the index, and therefore, how much to rely on is something which is always a question.
Give us a sense then as to how you're seeing activity panning out on ground in terms of demand.
As far as the latent demand is concerned, the number of people who are looking for homes, that is quite robust. But they are all deferring their decision because of the fact that the costs are going up, their own affordability is getting affected. And over the last 1 year, if I look at it in terms of cost, the price of steel used to be at around 32,000, 35,000 square, 42, 43,000. Now it has gone almost about 30% up. So that's the kind of increase that we have seen in the steel prices. Same is the case with cement, same is the case with stone, granite, marble. So the costs are going up, and of course, as far as we are concerned, we have no choice but to pass it on to the customers. At the same time, the expectation that the interest rates will start coming down, that has not yet got fulfilled. So of course, the interest rates are still holding. So once that starts coming down, I expect that the demand will then start improving.
Mr. Kumar, with respect to the interest rate scenario that you panned out, do you believe that that is a key concern, or do you think that it's a bigger concern with respect to the government and the kind of policy inaction that we've seen?
Well, as far as the larger economy is concerned, it has to do with the larger policy measures which are going to actually impact the investing activity. Investing activity clearly is down, and that is something which has to go up. And if that goes up, then only the economy will really get kick-started in terms of getting the growth up.